Hi everyone, I'm Chloe and welcome back to the Mentors Connect podcast. Today I'm pretty excited to have on someone that's a bit younger today, Yash Sodhi. And don't worry everyone, even though he's a bit younger, he's still achieved a lot in his career. He is currently the CFO of Challenger Limited's asset management business. And if you don't know, Challenger Limited is a leading investment fund manager here in Australia. And as well as that, recently Yash was recognised as a young executive on the AFR's Boss magazine, which is a massive achievement considering only 6 people each year are picked. So thank you, Yash, so much for some time of your time today.
Great, thanks, Chloe. It's wonderful to be with you.
Yeah, so just getting us started, I was hoping you could give us a bit of understanding of your background. In that article, I did see the bit of you had maybe an interesting start to your career. So tell us more.
Yeah, sure. Look, I'm happy to. And look, like you, Chloe, I'm a Melbourne person by background. I grew up in Melbourne. As a kid, actually, I loved all things basketball. That was my life. I played, I refereed, I coached, and having a couple of decades on you as well. I was really lucky. I got to grow up with Michael Jordan in his heyday, which actually was pretty terrific. I was very fortunate there. Look, as the years went on, I noticed the kids around me just kept on growing and growing and growing. And I'm not a short guy, but certainly I wasn't probably at the stature that was necessary to make it on the basketball court. So I decided I better focus on the schoolwork, and that's just what I did. So look, I enjoyed economics, accounting, business management, and maths. At school, I decided that, well, why not give commerce a go? Commerce is a really terrific degree. It opens up your eyes to a whole lot of different things in business. And for me, the areas which I found particularly appealing were strategy and finance. Over my uni years, I did a couple of internships. I did an exchange program overseas. I really knew I enjoyed working in a team environment. And I wasn't afraid of working long hours, particularly coming out of the uni time. So I did notice that sort of the smartest kids tended to be going down one of two routes, back at that time at least. That was consulting, management consulting, or investment banking. So I put my hat in the ring, and I was lucky to receive, or I thought I was lucky at the time, to receive a graduate role at Lehman Brothers, which again, for some of your listeners, is probably just a name you've heard around the traps, but doesn't mean much. But Lehman's was one of the bigger investment banks globally. The company had been around for 150 years, and I so happened to receive a graduate role in 2008, the beginning of 2008, which, as it turned out, was just at the cusp of the global financial crisis, and the collapse of Lehman's was the epitome of that global financial crisis. So look, it was a bit of a tough blow. As a 20-year-old, I thought I had my job and my future sorted out, and it was a bit of a defining moment. I did take a couple of sideways steps after university, tried a few things, but ultimately did find my path back into investment banking. So investment banking, for those who are not aware, investment bankers help boards and executives to help define and implement their strategy, particularly through mergers and acquisitions, but also through assisting with capital markets. So issuing shares onto the stock market, issuing bonds, managing the capital demands of the business. Now, I worked at a couple of different investment banks before I ultimately moved to Challenger just under 9 years ago. So that's been quite a journey here at Challenger. And over my time at Challenger, initially I was in the strategy team, working with the peers and our partners in the business to help articulate different growth initiatives, different strategies to support the business's growth and going into new areas. And about 1.5 years ago, I moved from strategy into the CFO role in the funds management business. I really enjoy working in finance. I work with a terrific team, a really talented group of individuals, and we really support the business in their initiatives. I sort of think about, if the organization or the business is the human body, strategy might be the brain, but finance are the artilleries which actually make everything happen. They run through the organization, and it's a really important part of the business to help connect projects, to help implement new initiatives, to help keep the business on track financially, and provide some of the new performance and analytics activities, which are now increasingly a role in the finance team as well. So that's a bit about my story.
Well, no, thank you for that. So now getting started with a few questions I've prepared. So you've given us a bit of insight about what you do, but I was hoping if you could just explain so we're all got a bit of a level of understanding. What does asset management involve and what do you on a day-to-day basis do?
Sure. No, it's a great question. I think it's not an industry that's particularly well understood, and that's something we need to work on in the industry because it's a really important industry in my opinion, and I think we do important work which touches most Australians. So assets or funds management in Australia, it's around a $2.5 trillion industry. So it's massive. And the industry works with customers across the institutional, both international customers as well as retail and household investors. So it is an industry which is very broad and far-reaching. It plays a really important role in bringing together those with capital to invest and businesses which need capital to grow and develop. And so when you think about this, funds management is essentially a services business. Investors entrust fund managers with their money to make investment decisions which draw on their expertise. And so these fund managers may have expertise around investing in the stock market, investing in the bonds or fixed income market, investing in other asset classes such as real estate. And they use this expertise to deliver an investment return for their investors. Now, there are broadly two different types of asset or fund management. One we call active management. And in active management, the objective is to outperform the market. And the way investors or fund managers look to do this is to draw on their skills and experience to find mispriced opportunities. So, for example, if a fund manager believes that a share should be trading at $10, that they can buy at $7, if they turn out to be right and the share over time gets to that $10 level, then they've generated a return. And that's a very simplistic example of what fund managers do across a whole range of different asset classes. Now, the other sort of asset management is around passive investment management. And that is where the fund manager looks to replicate an index or replicate the performance of the broader market. So they are not drawing on particular skills around investing, but they're providing a very efficient service to provide investors exposure to the market. Now, because there isn't the same level of investment skill and experience required, those are generally lower fee sort of services. So, look, as I mentioned, it's a huge industry, and part of the reason why it's become such a big industry is the superannuation system. And I know you've spoken about super in the past. Now, our super system this year turns 30 years old. I've got a few years on the super system, but not too many. And really, the super system is the way in which Australians save for their retirement. Around $1 in $10 of each of our wages goes into the superannuation system each month.
So it's a big deal.
It's a big deal indeed. And so superannuation funds, where our money goes to, they are one of the biggest clients of asset managers or fund managers in the country. They draw on the expertise of the asset managers to develop and deliver investment returns for ultimately the members, which are you and me and everybody that works in Australia these days. Now, there are other investors as well, those who look to invest directly with fund managers. And those household or mum and dad investors. You've got private investors who sometimes have higher balances and more complex needs. And a lot of these investors look to access fund managers through the use and support of financial advisors. And so what our job here at Challenger is to receive the money, to draw on our investment expertise. And we're an active manager, so we look to outperform the market consistently using our expertise and our insights.
Well, thank you so much for that. Guys, I've learned a bit now too. That's so good. Okay, so now continuing on, I've got a few questions, and this one I think is quite relevant now, especially as we see the world's changing and people's attitudes to money is changing. So kind of a long question, so get ready for it, Yash. So
yep, all right,
starting off, so who is the future investor and how have their wants and needs changed from, for example, my mum and dad and people their age? And building off on that, do they want more out of their money, and how is this impacting the way you strategize and people in the asset management industry strategize moving forward?
Look, Chloe, that's a great question, because there is a lot of change in the industry. It's a big industry, but it's a dynamic industry as well. I think the first thing to call out is there is no one investor, of course, or one future investor. Just like today, the investor of the future will continue to come from superannuation funds, from pension funds, retail and household investors, and private investors, and increasingly the younger generation. The younger generation are having a huge impact and influence around how the industry grows and evolves from here. So it's important to think about, given the number of different stakeholders in the mix, the way the market's going to evolve and is evolving is very much reflecting the changing priorities of society as a whole. That is what dictates the priorities for the future investor. Now, that said, there are a couple of big changes and trends which are playing through in our industry, which we need to take notice of in the funds management space. The first one, which is pervading all industries, is technology. So the future investor is after much more engaging and technology-led experience. So, you might know, the average TikTok user is on the platform about 6 hours per week. 6 hours, right? So that's a lot more than people tend to spend thinking about their money. And ponder that for a second. But it is definitely a bit worrying. But I think the fund manager of the future, and in response to what the future investor demands, needs to be providing different ways to engage with their end client in a more engaging way, with more bite-sized information, more real-time feedback, making sure that investing is insightful but also is fun, because it is something that needs to be fun if we're going to have people engaged and spending time thinking about their money and their financial future. The other thing is about convenience. So in the past, and that's only a few years ago, paper forms galore, checks being sent to the post, that is not the way in which business works today. Unless you can do it on your iPhone, it's not going to get done. And so that is very much front and center of the way fund managers are thinking about how they need to evolve their business to respond to the changing priorities and preferences of the future investor. And the other thing that's happening on the fund side is the way in which investing occurs. So you would have heard about artificial intelligence, automation, greater ways of tapping into big sources of data and drawing insight. And fund managers are actually doing this now a whole lot more to find new and nuanced different opportunities to generate better investment returns. And so this is really exciting because it means that you can turn a process which used to take days or hours in the past, and you can streamline that, and the benefit is for your ultimate clients who can generate better returns through their money. So technology is massive. It's going to be an ongoing trend, and it's going to be something that we need to keep on investing in and developing in the industry. Now, one of the other areas to call out is responsible and ethical and impact investing. And this is an area in particular for the young generation, where there's a lot of passion, and appropriately so. A few years ago, it was very easy for asset managers to simply say, we're not going to invest in these sorts of companies or buy these sorts of securities. That's not enough anymore these days. The future investor wants to see their fund managers being more actively engaged in the way in which their money is being used to drive positive social change. And so for us in the industry, we need to be thinking about what are the trends that are important to our investors, be it around environmental policies and change in the environmental space, carbon, looking at new ways in which we can make an impact through, for example, social housing, through other developments where you are giving back, using your money to generate a financial return, yes, but also using it to generate a positive environmental, social outcome for the broader community. Because we do operate in a community, and it's important that fund managers recognize the special privilege they have by controlling large sums of capital on yours and my behalf. Now, the last one I'll call out is around alternative investments. And so in the past, mum and dad investors in particular had access to really a narrow product set of different investment types. So you think about the share market or bonds, those were pretty much the universe, or property, for example, were the universe of where people used to invest. But as the market is evolving and investors are becoming more sophisticated, they're looking for different sort of asset classes, things which are a bit more interesting, venture capital, investing in startups, investing in new businesses or new models. And that's really exciting because it's going to create a whole new industry through the funds management space, which is going to be more engaging and more impactful over the long term.
Well, no, thank you for that. That's so good. And guys, I encourage you all also to go online and research about this a bit because it's going to have a big impact on you. And I know I will be. So thank you, Yash, for that. So now I've got a question which I think you're quite well set up to answer, hopefully, Yash. And okay, I've called it out before. You're quite young. You were chosen as a young executive for the AFR's Boss magazine for this year, 2022. Obviously you're in the finance industry, which is traditionally quite a conservative, I guess, not much changing industry, and perhaps until fintechs come around. But do you see more emerging leaders in finance becoming younger? Do you think this will be a trend we'll see moving forward?
Yeah, thanks. It's a great question. And I'll certainly say, for the record, I don't feel quite as sprightly as I might have a few years ago. I've got a few grey hairs
you don't.
to prove that as well. Look, that said, I do agree that in the right company with the right sort of leadership, the right support, the right focus in terms of hard work and tenacity, persistence, there is, I think, a change where age isn't going to be the barrier that it might have been in the past. So I think that's terrific. Increasingly, the leading companies are focused on diversity, and diversity comes in a whole range of different shapes and sizes. Of course, gender diversity, sexual orientation, cultural diversity, and age is another means of adding more diversity. And I think there's been enough research to show that more diverse organizations over the long term do outperform. And so I think that that is certainly one of the things that is going to be important when we think about how finance function and business more generally into the future is going to evolve. So coming to finance in particular, there are a couple of trends which I do think play to the benefit of the younger generation, but play to the benefits of diversity more generally. So one of those is technology. We touched on that before as it relates to asset management. But in finance, technology is a bigger part of the story than it ever was. Increasingly, we're relying on systems, automation, to do things which were otherwise done manually. And the more tedious tasks are now being done by computers and not by humans. And that means that we are reducing the errors. And we're spending time on things which actually are more impactful. We're adding more value to our businesses and to our business partners because we've got more time to think about how the business is operating and how things could change to deliver improved performance. The other thing that is also relevant, again, picking on some of the broader themes in the asset management space, is sustainability. And increasingly, finance is a function which is being looked to monitor and report in a consistent manner the environmental and social impact of business. And, in the accounting world, there are financial standards. They're many volumes long. And there are equivalent standards which are now in the early stages of being developed from a sustainability perspective. And finance professionals and accounting professionals in particular are being looked to as a trusted source to make sure that we are reporting in a transparent way, that we can have confidence that our companies are doing what they'll say they'll be doing, and that we're delivering on the community expectations as well as the financial expectations of our shareholders and other stakeholders. So look, coming to your question, I do think there is a changing demographic, a changing color to what the finance function of the future looks like. But that's really more about more diversity, and age is just one of those levers.
No, thank you so much for that. Yeah, that makes complete sense. And before we finish up today, Yash, it would be great if you could give the audience a piece of advice, maybe for a young person who's been inspired, wants to go out there, maybe, be a part of the diverse future for leadership in finance. What advice do you think you could give them?
Yeah, look, and I've got to say I've been spoiled over my career, but no shortage of great advice given to me. One of those is very much around embracing a growth mindset. And that's probably something you've heard and talked about in the past. But for me, a growth mindset is where you're open to learning about new things, and you're bringing your experiences from different areas together in the work you're doing and people you're working with. And for me, finance is my third career shift. I started in investment banking, focusing on M&A. Then I did sort of strategy for a while, and now I'm in the finance space. And I think that I'm a better professional because I've done different things over the course of my career. And I've also explored interests outside of work, which have sort of helped round me out. And I look at the really strong performers I have in my team and around the business more broadly. And those are the people who like to think and try and do different things. They're not scared to put their hand up, to take a little bit of risk sometimes. And, in the right organization or the right team, you always have the support to sometimes, things will work out well, and sometimes, it won't be the perfect fit. But, the important thing is to try to learn and develop and give yourself the opportunity to develop those new skills. So very much, I'd say for the leaders of the future, focus on keeping your mind elastic. Keep on stretching it in different ways. Look for different ways that you can get exposure to be companies, individuals, new challenges, new industries, because it's through sort of getting that exposure to a whole heap of different surfaces. I sort of think about them as, each different surface will give you something new to your complexion. And I think that approach around that elasticity of thinking and exposure to different surfaces is going to be what's going to differentiate the leaders of the future.
Well, thank you so much, Yash, for that great piece of advice and for talking to us today and giving us so many great insights. It's been a real pleasure talking to you.
Thanks so much, Chloe. Great again to be with you, and congrats on this wonderful podcast.